Before we dive into today's episode, we want to emphasize that the content provided in this podcast is for informational and educational purposes only. We are not financial advisors, and the information shared here should not be considered as professional financial advice. Always consult with a qualified financial professional before making any financial decisions. Yes. Hello, everyone. Welcome back to our series on casual chats with four NRI professionals, and uh, and this time the topic is insurance. We'll we'll start by going around the room talking about our perspective on insurance. Then we'll have follow-up questions. So, who'll go first? Rohit, do you want to start?
Yeah, sure. Um, so first thing is insurance is important. There's no doubt about it, no questions about it. Um, how much insurance you need, what type of insurance you need, that will depend on who you are, what age you are, what your life goals are, how close you are to those life goals, where do you live, where do you work? You have your own business, you're working as a salaried professional, freelancer, whatever. So there insurance is a complex topic, unfortunately. Ideally it should be a very simple thing, but just because of the different types of products and a lot of mis-selling that has always happened, not only in India but across the world, it has become a very complex and very complicated topic. So I hope that in our conversation today we will be able to unpack that a little bit.
Isha?
So I agree with what Rohit said. Insurance is very important, not very often discussed also because insurance kind of gets linked to all the negative events that happen in life or happen after life. So it's not an easy topic to have a conversation on, and which also makes selling insurance from a professional perspective very difficult. But insurance is basically your downside guarantee. So just like any other topics on finance that we will discuss or have discussed in the past, it basically provides you with comfort that if things go wrong, there is something that can protect you or something that takes care of you. So it basically just guarantees your downside. And that for that reason alone, and if I'm to take away all the other aspects of insurance, just talk about the basic concept of insurance. Just for that, I think insurance is important.
Madhvesh, any added opinion to Rohit's and Ishan's?
No, I think Rohit and Ishan summed up really well. For me, like insurance, actually, if you stack rank it in terms of priorities, it comes second to emergency funds. Even before you start your investment, I think insurance should be one of the top priorities according to them. And like basically, insurance is your leverage against uncertainty, and like we are moving into a more uncertain world every day. So you will need to definitely have that leverage to make sure things work out on the positive. So yeah, we can discuss further about the product.
Yeah, so same. I agree with all that's been said. Having said that, I will roll this into the follow-up questions where we all agree insurance is important. But what insurance are we talking about really? Are we specifically talking about life insurance? We're talking about health insurance or home insurance, all sorts of insurance. You can insure anything now. Ronaldo is insured his foot, which makes sense. That's his tool to earn money. So among all of these different types of insurances, do you think we should go for each of them, or there are one or two that you think take priority and others are based on the situation you are in? Anyone can go.
I think as you rightly said, there are a bunch of different types of insurance available in the market today. For an average person, the two most critical types of insurance is life insurance and health insurance, which in India some people call it mediclaim, medical insurance, etc. I think these two will cover the widest range of issues that a everyday person is expected to face. And then, of course, as you amass different types of assets, you can obviously choose insurance for that. When you buy a home, you should have house insurance. When you buy a car, you should have car insurance. If you are Ronaldo, you should have leg insurance. As simple as that. So I think what we can probably focus on is primarily life and health insurance, and then also talk about some of the other asset protection insurances like your standard car and home insurance that are available in the market. So I'll maybe share a couple of very quick points. Number one is life insurance. So the most purest form of life insurance available is called term insurance, which is basically you pay a premium. You set a term like, okay, I want to be insured till I'm 60 or I'm 70, and I want to be insured for X number of X amount of money. That could be 1 CR, 5 CR, 10 CR, whatever is available, depending on your liabilities, your earnings, what you believe will be required if you were to suddenly pass away. The other type of insurance is obviously health insurance, which covers your medical requirements if you fall ill, if you're hospitalized, if you meet with an accident, etc. Funnily enough, I remember writing some kind of an article or blog post a while back. Something that I said there was, if you're the sole breadwinner of your family, the biggest risk to your family is not that you're going to pass away, because if you're dead, your family will figure out some ways to sustain themselves. The biggest risk is you don't pass away, you stop earning, and you start squeezing out the money that your household has accumulated. So things like if you get into a critical illness cycle, you have a long fight with cancer, which is going to be very unfortunate. Maybe you meet with an accident and you require a lot of intense treatment and therapies, etc. What that does to a household is basically it whisks away all the money and all the assets that you might have accumulated, and it does not give you anything back in return. So things like health insurance, and even within that, protections like your disability insurance, accidental insurance. There are a bunch of different products available to cater to different risk scenarios. Prudent approach to insurance is to identify what are the most common factors available, what are the most common risk factors that you can get exposed to, and then identify products accordingly, and then have some amount of protection for all of those, obviously to the extent that you can afford.
Let's do this. Let's call out the insurances each of us are registered for and are paying premiums for, and that might give the listeners an idea of the approach we have taken. So maybe I can start on this one. I have 2 life insurances, which now that I'm saying it, I know does not make sense. You're paying premiums in 2 places, but for some reason, I actually not for some reason, this happens to a lot of people I know. The first life insurance was registered by my mother when I was young enough to not care about finance and these things. This was LIC in India. Then when I started to think about finances, I got one for myself. This was in Singapore with Prudential. So that's the approach I have taken, and both are term plans, so they're not mixed with investment vehicles. Yeah, health insurance is an interesting one. Health insurance, I've always had health insurance till now attached to the company I was working for. The company provided the insurance, and I didn't have to worry about premiums and all of those things. But as of now, I I am thinking that I should think about premiums and think about one insurance myself and not be dependent on the company I work for. Layoffs and all of these things. You never know, you might get hit. Anyone else?
I can go next. As Rohit covered, like the two most important insurance, which 90% of the people should have, are term and health. So I also have them. In terms of term insurance, and I'm only talking about products that I actually bought. There are other investments done by my parents, probably in LICs, which are across multiple policies, which I'm not aware of. So I'm not including them. So I have one term insurance, which I pay a yearly premium for, and one health insurance out of my employment benefits, outside of my employment benefits. So that, as Siddharth mentioned, if there are any unforeseen circumstances with the job, I have some cover to take shelter. So yeah, so these are two insurance I have. I've also explored buying a home insurance for my home, but I'm delaying it a bit. I'm currently servicing my loan for my home, so I'm delaying it a bit till my loan is done, because I know, like, if something happens during the loan period, the loan company takes care of the insurance part, or like they. So I will be delaying that. But given the uncertainty of the climate as well, I would definitely purchase a home insurance once my loan period is done.
You guys touched on most of the points. I also own two term insurances like Siddharth, one in India where the beneficiaries are my parents, so dependents in India, and one in Singapore where the beneficiaries are my wife, so for dependents in Singapore. Health insurance I've had for a while, and I think apart from the company cover that most employees get from their companies, and these benefits can vary significantly based on the companies. Certain companies cover almost everything, and it's a pretty large cover. You don't really have to worry about anything. Some other companies don't. So I think that calculation, like Siddharth initially said, you need to think about what coverage you need and what amount you'd like to get yourself covered for, and what situations you'd like to get yourself covered for. But you need to get those insurances in time, also because as you keep getting older, your insurance premiums significantly shoot up. And I think one of the things that anyone who is interested in insurance should check or read up on is what the age brackets are for insurance premiums to have a step up jump, because suddenly at a certain age, insurance companies treat you as a much bigger liability than you were a year ago. So you would want to get those insurances in before you become a larger liability for the insurance companies. The only other point I'd like to make is for a lot of company insurances, and this is since we are all folks sitting outside India and we have company coverage. So for a lot of folks who have dependents in India or just dependents in general, it would be good to get all your dependents on your company insurance plan, especially your parents, because for a lot of company insurance plans, before your parents touch the age of 60, you can get them onto the plan without any further inquiries on their pre-existing conditions or getting health reports for them. You can simply get them added onto your plan. As soon as they become 80, they need to get a doctor's certificate of their fitness, as well as no pre-existing conditions are covered. So just in case someone doesn't have it who listens to this, it might be good to check up on your company plan and get your parents on board before they're 60.
Yeah, absolutely. I think I also have a term life insurance in India, and I have a medical insurance in India also. I don't have any personal insurance here in Singapore, which like I've been sort of coasting on the employer insurance for a long time, and thankfully, the employer insurance is pretty good, so most of the needs have been covered. But I think, Ishan, you touched on a very interesting point. My wife, for example, works for a different employer, and her insurance is not that great. So for almost every instance that I remember where she has had to take any sort of medical help, she has used my insurance because I got her added to my insurance when we got married. So this is important. I think equally important to like parents. If you have kids, like, I think all of that, like as many people as you can get added to your company insurance, you will usually get a lot of benefit out of it. Another insurance that I used to have was an insurance against my education loan. So when I did my MBA, I took a loan from the bank for funding my education, and that it was not super complicated because the bank basically had a process where they almost insisted on having an insurance coverage in place. So my EMI amount for the bank loan included the cost of insurance premium also. So that's like the third type of insurance that I have been exposed to. I now realize it's a bit of a gap since we are having this conversation. I don't think my dad's flat in India is insured. So that is something that I need to follow up on after this call. But yeah, I think those would be very typical and very standard types of insurance that you will probably experience or encounter as you go along your life journey. So as you go in for your higher education, you get to a stage where you're buying a house, where you're buying a car, where you have kids, your insurance needs, your insurance amounts will change. And obviously the premium that you will have to pay at different points of time, depending on your age and other health conditions, those things will also change. So again, something that ideally should have been a very simple thing, widely available, easily accessible. It's unfortunately not the case. It does require fairly good amount of homework to understand what insurance should be purchased, how to optimize for different pros and cons of different types of insurance, etc. The only way out of that is to actually spend the time, do that homework, because in my mind, at least, insurance is completely non-negotiable. Like you can stay put without investing for some time, but I don't think you can really sustain yourself without having insurance.
Let's end this session with the last question, which relates to Rohit's point on insurance being non-negotiable. So I will pick this point up and connect it to something that Madhvesh had said, that the number one priority is emergency funds. Number two is insurance. How do you guys see emergency funds different from insurance? And wouldn't was few HNIs, and not just HNI, but even people with some considerable amount of savings consider emergency funds to be servicing what the insurance could service, and in the process save on the premiums that they have to pay? What are your thoughts on that?
I would say that emergency funds probably cover for your daily expenses, which, for example, could include your rent, your grocery spend, your eating out spend, your school, children's school fees, etc. But insurance is something which is going to care for your uncertain expense. So this would be categorized, let's say, the emergency funds bracket.
But you can set emergency funds for uncertain situations also, right?
Yes, you can, but the problem is, since it's uncertain, you would not know what you should be saving. And if at all you are going to shave it, the emergency funds is going to be in a liquid corpus. Having a very big liquid corpus is actually going against you, because you are going to lose the value of that money as time goes by due to inflation and other factors. So it is prudent to have insurance if you are not someone who's in the top 10% of income in the world, where you can fund against most of the liabilities. For example, let's take cancer or even a heart surgery, which should cost somewhere close to 10 lakhs in a good hospital in India. And you would have your emergency funds is going to be depleted in one instance if you are going to have that surgery immediately. And most of these surgeries need to be done are time sensitive. It's not going to be like 3 months start. So that's where I see insurance and emergency playing hand in hand to save you in terms of such dire needs.
And I think this is something that I get where the question is coming from to that, because at some point you might have enough money that you don't really need whatever protection you're getting from the insurance. So that's primarily how I see term insurance as well. Hoping that I live out longer than the term insurance, I would at that time have enough money with me through investments or savings, that the term insurance itself, the amount of it, will not be a huge difference to my life or after my life, because whoever my dependents are will get the same amount of or larger amount of money. But when you're starting out in your career, when you're somewhere just on your journey, you may not have that level of savings, so you may not have that level of confidence in what you have, that this will sustain in a situation of crisis or sustain my dependents after me. So it's effectively, like I said, it's effectively covering your downside. So it's downside protection for you, where if a crisis situation happens or if a really bad event happens, you have protection where you can get a lump sum that you may not have saved up in that. Plus, something that Madhvesh was saying, when you're getting insurance, you're paying premiums not at the same level, but a smaller amount every year, adding up to a large sum assured at the end of the insurance, or in case of a situation that happens. If you kept that entire lump sum on the side, I would, and we've discussed this before, we'll probably discuss it again, that money would do better if you were investing it rather than keeping it as liquid cash. So I think it's just smarter to do it this way till the time you reach a stage in your life where you're like, I have enough money, insurance is not really as important to me now. I'm assuming for a lot of people, that is not the life stage they've been in earlier.
Yeah. One, I think that mostly covers everything that I fully aligned with that. The only thing that I can add to it is, for health insurance, the ROI always works in favor of having an insurance rather than not having an insurance, whether you are a HNI or not. Like, no matter how much money you have, you will still end up paying a lesser amount as insurance premium, and then use the insurance money to fund your medical bills rather than using your own savings, even if you can afford it. So the ROI usually tilts in favor of having health insurance. For life insurance, I think, Ishan, what you said makes sense. There's probably going to come a stage where having that life insurance or not is not really going to make a big change to anybody's life. So you can sort of take away or discard it. For HNIs, over time, and this is purely, I'm not an HNI, so I've only read about it, but what will become more important is asset protection insurance. So things like protecting their business from litigation, protecting, their brand and copyright if they are business owners, or protecting like their assets like real estate, properties, etc. Those things become more important and more critical from an insurance perspective than life insurance as you accumulate more money and you basically grow in your life. So yeah, those are the closing thoughts on that particular question.
Yeah, cool. Well, I think this was a good chat. We covered questions, we discussed how we approach insurance, and some extra points on which type of products one should focus depending on one's stage in life, one's economic state. Good. Thank you all for listening. We'll come back in the next episode with a new topic.